as United Airlines takes the rare step of giving out two different outcomes in its full year guidance, giving a recession scenario outlook and a non-recession outlook. Well, joining me now is Julian Emanuel, Senior Managing Director at Evercore ISI. And Julian, it's great to have you on. I know you've brought us some picks, and I do want to get into those. But first, I do want to get your thoughts on the fact that we did just see this double forecast out of United Airlines. I can't remember a time, at least in recent history, where we've seen a company take the step of doing that. How does it speak to this moment we're in, and do you expect we're going to see more of this?
It's an incredibly smart move by management, Morgan. Look, we all know whatever the measure is, consumer confidence, CEO confidence, trade uncertainty, all of these elements are near record highs. And if a company can give investors sort of a worst case scenario modeling, you can plan. You can, think about your downside. You can think about how the business might evolve. And frankly, you can also think about the elements that would cause that not to occur and cause them to, meet the revised forecast and potentially beat them. It's just, it's our fondest wish that the rest of corporate America will take that angle as well, as we have in, recently cutting our price target to 5,600. We modeled bull and bear cases as well. Everyone should do that exercise.
I would note 5,600 still higher than where we are here. It looks like we settled at 5,396 for the S&P 500. Looking at your note, what got my attention was the fact that you signaled that the bearish sentiment here, the trading volumes, reminded you of the great financial crisis, the Gulf War trough, both of which you said are generational buying opportunities. Is this a generational buying opportunity?
I wouldn't call it a generational buying opportunity with a great big G, because frankly, the valuations are much higher now than they were then. But when you think about the depth of pessimism, the depth of sentiment, we did an investor poll of 1,000 clients just this past Friday. 81% of the respondents thought we were either already in a recession or were going to start a recession in the second half of the year. That's about as pessimistic as you can get. And when you look at the bull bear readings as well, those are really evocative of trend endpoints rather than continuations. Our view is the rest of the year is going to be difficult. It's going to have an upside bias. There are paths to higher prices than 5,600, but it's a very fine line. And obviously, the uncertainty is going to remain quite elevated.
And we have seen more defensive sectors in the S&P, for example, have outperformed everything else in these last couple of weeks. What do you buy here now, then?
We actually want to take some chips off the table in those defensive sectors, primarily because if you think about last week, those defensive sectors had outperformed in large part due to the feeling that we were coming into a recession. And I think we got a lot of questions from clients. Does Washington actually want a recession to occur, given its desire to lower interest rate and lower oil prices and so on? And we've always felt the answer to that was no. And the Trump administration, put an exclamation mark with its pivot that the answer to that is no. And in that environment, the defensive stocks lose some of their luster, particularly as yields move to this stickier type level. We want to go back with what were prior the bull market winners, technology oriented, who also had the most damage in this last sell-off.
So the tech trade is back. Name some names for me.
Well, we've looked, in the Mag 7, Google's very interesting to us. Salesforce and Uber are the ones that stand out. It's a quantitative screen of stocks that are trading near 5-year trough valuations. And what we found out, importantly, last week is that looking at 10 years of history, when more than 80% of the S&P 500 is trading below the midpoint of their 5-year valuations, it's a very strong buy signal for the market. Happened in 2018, happened at the pandemic low in 2020, the bear market low in 22, the interim low in 23. We believe it happened last week.